Back to our special show, The State of the Economy, 1 year after demonetization, and now being joined by two veteran economists, Dr. Sajjid, who has been a long-time watcher, a several decades watcher of the Indian economy and currently member of the Prime Minister's Economic Advisory Council, and Sajjid Chinoy, the economist from JP Morgan, India. Gentlemen, thank you very much for joining me. Well, Dr. Bhalla, let me start with you. Your estimate of the costs of demonetization, and have we paid it all up and there's nothing, hereafter we don't have to see any costs of demonetization?
I think, yeah, the costs of demonetization were felt basically in the September to December quarter last year and January to March quarter this year. And my estimate of how much loss there was to the economy was somewhere around 0.3 to 0.4% of GDP on an aggregate annual basis, and if you will, for those two quarters, about 0.8% of GDP. I think most of the costs are over, if not all of the costs are over, and already several pieces of benefits are appearing about or because of demonetization. And I think the last part of your question was, do I see any more costs coming up? No, I just see now the benefits accelerating and increasing. Okay.
No, I do want to dwell on the benefits because that, I assume, are long-term. But Sajjid, a word on how you would estimate the costs of demonetization. You know, we were running up until the first quarter of FY17 at about 7.5% GVA, and it dropped to 6.7, and then 2 quarters to 5.6 and 5.7 GVA. So how much of this is really, you know what, that would work out to about over 1 percentage point on a rough calculation. What would be yours?
Well, Latha, I think we need to be careful here because the economy was already slowing well before demonetization. So just to look at the endpoints and attribute all of the slowdown to demonetization is not fair. The subsequent slowdown is also impacted by the destocking from GST. So one has to be very careful about teasing out the impact of demonetization. Our own sense is that it was somewhere between 0.8 to 1% of GDP, and we come about this very simply. We essentially have a forecast that was made by the CSO in January for growth in 2016-17, only using pre-demonetization indicators. So in a sense, we already have the counterfactual that the CSO gave us, and we update that counterfactual to see what was the eventual strength of exports and agriculture, which were in a sense exogenous, and compare that to the actual print, and therefore work out that the cost was somewhere between 0.8 to 1% of GDP. There was an indirect cost as well, I would argue, that there was, we believe, a transitory supply shock, where supply chains were disrupted involving small, medium enterprises, and therefore imports have picked up quite sharply and the current account widened. But I agree with Sajjid that when you look at these things, you have to trade off the near-term cost with the medium-term benefit. And just because we can't fully quantify the medium-term benefit does not mean it doesn't exist.
No, I agree with you. And, you know, there was also the argument that the GVA measures only the formal sector in the short run. The informal sector is not measured in the short run, and that comes in the subsequent revision. So we probably will have to await that. But Dr. Bhalla, just on that issue of imports and exports that Sajjid was raising, when you give your measure of 0.8, which largely, Sajjid agrees with, do you also reckon that we lost a bit of exports? We did see exports slowing down at a time when global economy was picking up in the first 2 quarters of the current calendar year. Are those factored in your 0.8% of GDP loss that you are speaking of?
No, absolutely. Plus, I want to point out a little bit, you know, the Indian economy suffered 3 shocks over the last year. The first shock is demonetization, the second shock is GST, and the third shock was felt by every economy in the world. And that is, if you will, the volatility in the terms of trade, international terms of trade, exports versus imports, which Sajjid also has written about and is quite important. Now, the story is that, you know, if you recall, last year, every economist around the world was, you know, today is the 100th anniversary of the October Revolution.
Oh, yes.
But last year was the first year since 1945 that trade growth was actually lower than GDP growth. So something was happening in the world, and it affected us.
Okay.
It affected us in the following way, that the time period when we were doing rather well in terms of GDP growth, which is before demonetization, was also the time period where current account was very, very low. And if you will, for a couple of quarters, I think it was in surplus.
Yes.
So that was adding to the GDP growth.
Okay.
And so the slowdown that you see, or that we have seen, is really a part of it. I think none of the slowdown, quite honestly, has much to do with demonetization. We already mentioned 0.8 on an annual basis, on a, if you will, half-yearly basis, and 0.4 on a quarterly basis.
Okay.
So on an annual basis, I'm
Sure.
sorry.
Sure.
So, you know, that's really very small, given the magnitude of the fluctuations caused by terms of trade changes.
Absolutely.
So, you know, in the second quarter, when we recorded a GDP growth of 5.7%, the current account was 2% of GDP, minus 2%, whereas just a year earlier, it was, if you will, very close to even.
Okay.
So I think, you know, there is a slowdown. We did suffer a shock. The world is suffering shock. I think our current account is improving now. And I think very soon, and by very soon, I mean in just the third calendar quarter data when it's released at the end of the month, my hunch is, and I'd love to hear what Sajjid's estimate is, but I think, you know, it'll be somewhere around 6.5 plus. So what happened to the growth slowdown? Because of demonetization.
Okay.
There was a growth slowdown, but it had precious little, in my view, other than a very short-term impact, and which is very, very obvious, very, very recognizable.
Okay.
Other than a very short-term impact, I think it's no longer there.
Okay. Well, time permitting, I'll come back to the slowdown. But you're right. You're right. We should be focusing on whether the economy is already picking up. Sajjid, just on respond to what Sujit Bhalla is saying. You think that this is the rebound quarter? You would agree with the 6.5% possible uptick in growth that we will see when the numbers come on November 30th?
I do agree that I think GDP growth has bottomed. I think 5.7 was the bottom. I do expect that in the next quarter there will be an acceleration. And I think, but we need to be careful here. Our own estimate for this quarter is in the low sixes, so slightly below Surjit. What you will see in the second half of the fiscal year is GDP growth numbers bouncing up to 7%. But we need to be careful here. A lot of those year-on-year numbers have very favorable base effects because of what happened in the last 2 quarters of the previous year.
Sure.
If you think of where the quarter-on-quarter annualized momentum settles, our own forecast at the end of this year is somewhere closer to 6.5%. And I think it's understandable why the recovery is incomplete, because apart from demonetization and GST, there still are, I think those effects do fade. And I think that's part of the re-acceleration. But there are still some drags facing us, some old, some new. I think the deleveraging process is gaining steam. That's a very good thing from the medium-term perspective, but the more firms that go into bankruptcy and the more impaired assets that are written off will not be good for investment, so that will be a drag. And let's not forget the elephant in the room, oil prices. Oil has gone up 20% in the last month. If oil's at $65, and Sujit alluded to this, that's a negative terms of trade shock for India, whether it's the fiscal, whether it's households, whether it's firms. So I think there are still some headwinds which will, in a way, take some of the sheen off the recovery from both demonetization and GST. We see full year growth closer to 6.6 or 6.7 for what it's worth.
Dr. Bhalla, on the issue of growth, what's your sense about the gains of demonetization? How are you looking at the medium-term and long-term benefits?
Yeah, you know, Saj, I will address that immediately after the following comment. Sajjid mentioned the elephant in the room, which is the oil prices. I happen to think that's not even an elephant, that's a baby elephant at best. The biggest elephant in the room is what the RBI has been doing, has been raising real interest rates. We've shown the largest increase in real interest rates of any economy, and over a 3-year period of any economy at any time period in history. Now, there are Indians who argue that interest rates don't matter, and I believe many of them reside in the RBI or in the MPC. But really, what is the logic? If you're talking about the growth slowdown, and you're having a program on why the economy has slowed down and whether it can recover or not, I think that is the biggest elephant in the room. And incidentally, I happen to quite agree with Sajjid that 6.5, 6.75 or so is what the long-term trend is, given the real interest rates, highest in the world. Think about what that does to competition. Think of what that does to industrial growth. Forget the NPAs. We keep mentioning NPAs. Of course, that's a major problem. But 80% of investment is outside of the NPAs, outside mom and pop stores, if you will. Even in rural areas, money lenders base their lending on the basis of what the RBI sets the interest rates at. So, if we were to get the RBI, or if the RBI were to get real, and all puns intended, then I think the Indian economy can look forward to something like 7.5% on a trend basis. Okay. So that's my first, we're talking elephants, let's talk about the mother of all elephants.
All right.
And that's the MPC and the RBI.
Dr. Balla,
now to your question.
Yeah, that'll hijack the discussion into something else, so we won't get into that as a debate. But do tell me what
it's not something else.
Yeah. Do tell me what do you see as
Latha, it is not
benefits?
Something else.
Yeah, sure.
Yeah. It is not something else. It is the growth slowdown. And if we have finished discussing the growth slowdown, I will now move on to what are the benefits.
Benefits of demon in particular. Yeah.
The correct metric of demonetization, the correct purpose of demonetization, in my view, not necessarily anybody else's, but certainly in my view, was, if you will, that this will bring about, this was an attack on black money, and if you will, this will bring about increase in tax compliance.
Yes.
Income tax compliance, corporate tax compliance, and the others.
Yeah.
The tax compliance ratio in India is one of the lowest in the world, and it's about 25%. That means
are you already seeing
individuals in India pay...
Yeah, Dr. Balla, but are you seeing it in the fiscal numbers up until September?
Yeah, and let me now answer you that question. Very good question. And when the budget was made in February of this year, they had factored in a nominal GDP growth of 11.8%. Okay? Now, taxes are a function of nominal GDP growth, nominal income growth, not real, not anything else.
Sure.
As it happens, GDP growth this year, the latest data available, is only nominal GDP growth is only 7.9%.
Yes.
Okay?
Yes.
4 percentage points lower than what the budget makers had assumed.
Yes.
And tax revenue is on target.
Yes.
For the entire year. It's completely on target, including direct taxes and a little bit extra from indirect taxes because of oil, but direct taxes are pretty much on target. So that tells me that compliance has increased big time.
Absolutely. Unimpeachable proof.
This is actual tax revenue.
Yes, yes, unimpeachable proof. Dr. Balla, I take your point entirely.
Absolutely.
Yeah, but I want to go beyond that. Okay, Sajjid, respond to the fact, do you see it in the fiscal numbers already? As well, what are the other attendant benefits you see in the medium term, say, over the next 24 months?
So, Latha, I think there are three very kind of tangible metrics that we can judge the long-term benefits of demonetization with. One is, what is the outstanding stock of cash in the economy? The second is what happens to, as Sajjid said, tax compliance and tax revenues. And the third is, what percent of transactions eventually migrate to more digital transactions. These are very three objective parameters. Let me start with the first one, because I think that's where you've seen the most progress, right? So if you talk about cash, now the night before demonetization, you had about 17.5 lakh crores of cash outside the currency in circulation.
Yes.
And if you look at the run rate over the previous 2 years, that should have suggested that by now, a year later, cash in the economy should have been closer to 19.3 lakh crores.
Yes.
If you look at actual cash holdings, it's 16 lakh crores. It's almost 20% lower. So at a time where the transactions demand for money has stabilized and the outstanding stock is about 15 to 20% lower, that clearly tells you something about the fact that there's less cash that's floating around, number one. Number two, just to add to what Sajjid was saying, one easy metric on the fiscal is to say that if you look at the number of new taxpayers this year, it's in 2016-17, it went up by 26%, and this compares to 20% and 5% the previous 2 years. So clearly there are more people in the net. Will it take time for those revenues to show up? Absolutely, but at least you now have the data that you can use going forward. Let me make one final point. The tax compliance issue will also benefit enormously from GST. GST focuses on indirect taxes, but once you have people in the net for indirect taxes, using big data, you can also mine from that more direct tax revenue. So I'm hopeful about where taxes will go over the next 2 or 3 years.
We are completely out of time, but this is a most enlightening conversation. Sajjid Bhalla, Sajjid Chinoy, thank you very much for joining us. So we need to take a break. We are coming back with more economists on the same issue, state of the economy post-demonetization.